And how many of you either are actively fundraising or expect to fundraise relatively soon? Okay, quite a few. And then entrepreneurs from the Valley? Okay, and I guess the rest is other. Okay, so I just put out my background to give you a reference. I've done a few startups. I've been active as a board member in a few companies, and then I've done about 80 or so angel investments, and there are a few of those that I put out there. So I've had the experience here in the Valley. I'm originally from Venezuela, but I've been here in the Valley for 20 plus years, and have seen it from the startup ecosystem, both as a founder doing friends and family, angel, venture, later stage, strategic, and then on the other side as well. So one comment that I think it's important to highlight is that the Silicon Valley is obviously another planet. It's very different than the rest of the world. I am biased. I have spent the last 20 plus years here, so you should take what I say to be referenced primarily to Silicon Valley. And to be clear, Buenos Aires is in some ways as far from Silicon Valley as Los Angeles or Sacramento. The way things are done here doesn't expand too much outside the Valley. Definitely not to a place in the middle of the U.S. There's some things that are a few other ecosystems, but now what is it that's particularly special? We have the whole get the company going, grow it, support it, how to fund it. I was in Mexico recently, and I was talking with one investor who should remain nameless, and he was telling me about a certain approach he was taking to some conditions in the financing or what he was going to do if things didn't go well. And I was saying, but look, we already proven in Silicon Valley that's not the way it works. Here's how we do it. He wouldn't hear of it. So, and this was one of the most prominent investors there. So we seem to have it down here, and in a way that works. And the other thing that's amazing here is just so many people that can help you in all regards that have done it so many times, whether it's the accountant, the attorney, the HR person. And again, very difficult to find. I did a company in LA not too long ago, and the attorney for the company just couldn't figure out the term sheet, things like that. It's great to come, and it's awesome that you guys are here, and you can obviously learn a lot, but part of what Silicon Valley is, it's things like you're doing your hobbies with people. I am a kite surfer, so I'm kiting, and I'm kiting with the people from Twitter and Google and Facebook and so on, and it's something that's hard to capture when you're visiting, but what it means is that a lot of the business that I do comes from those kind of interactions. I'm going to ask a favor. It really helps me if anybody has a question or a comment, if you go for it. Because that way I can just pause, think a little bit about it, maybe drink some water. So please don't be shy. Those of you who are from here and who have a different perspective or something to add or something to disagree with, chime in. And those of you who are not from here but have a question or an opinion or what have you, please go for it. I think we might have some time at the end. Maybe we'll eat pizza and hang out for a while, but still, that would be helpful. So I'm going to start just talking a little bit about fundraising specifically, given that so many of you are, that's relevant. And then I have a few additional thoughts. And again, I'm going to try to go quickly through these things. Stop me, something that doesn't make sense, or if you already know it, I'll try to figure it out and move even quicker. Typical thing, you're seeing a lot of price rounds and lots of convertibles with a cap. Some people make a big deal out of it. Oh, it's a price. I don't think it makes that big of a deal. And I think people obsess too much about it. What matters is it relatively fair? You see valuations. Here it's typical 4, 6 million, sometimes a lot higher, sometimes a little lower. Again, it's supply and demand. It's also how much are you raising. You don't want to end up in a situation where you're only giving away, say, 5% of the company, but you don't want to be in a situation where you're giving 40% of the company. So those things are very, very in line. The other thing that's become common lately is to do these convertibles that are one after the other, and without you doing the price round, just the cap keeps increasing. I'm an investor in Optimizely, for example, and those guys did a price. It was fascinating. They did a first convertible with a cap, then they had more interest and they did another convertible with a higher cap. Then VCs wanted to come in, and a bunch of VCs put a few $1 million at a convertible with even a higher cap, and eventually, after like 2 years, they did a price round. So if somebody tells you, I don't do convertibles, maybe it's true, but what I have found is when an investor wants to participate, he or she, they make it work. Then when they're not so sure, there's always a good excuse. So that's the main thing. Another point is I get entrepreneurs who ask me, well, should I do, I'm thinking about doing just angels, I don't want to get an institutional, the signaling, it's very, particularly here, it's very gray. It's not like they're VCs and they're angels. Angels themselves, they go from friends and family to executives that do a little bit of angel investing, to people say like me, who do like full-time angel investing, to angel investors that now have their own fund, to institutionals that are just getting started, to institutions that have large funds. It's really gray, and even within each group, each individual is different. So another thing, I wouldn't obsess too much about it, I wouldn't worry too much about it. What matters is who's the person. I wouldn't worry too much about combining them, etc. If it's a group that makes sense. Okay, you're not helping me. I'll keep going. Maybe you're all ready for, you want me to get finish quickly because the pizzas. I'll just mention this quickly, which is that some people say, well, I'm planning that it's going to take this many months to do my fundraising, so I have to do this or do that. And what I see is that rounds either they've done really quickly or really slowly. You know, Stumble Upon is a company, they were from Canada, I helped them come here, and long story short, very attractive deal. We did the round in like 4 days from first meeting to it's committed from the best investors in the valley, and it was done. On the other hand, I've seen some that never get done. So you be careful using averages to plan, because sometimes it's unlikely that yours. Yes, thank you.
In your opinion, what's the best way to meet with individual angel investors?
The best way to meet with individual angel investors. So I think the first thing that's really important is that you target the right angel investors. Don't target the usual suspects just because they're the most active. If you have a company that has a product in a particular segment, find out who are the angel investors that have done things related to that, who have blogged about it, tweet about it, made other investments. And I mentioned this in another slide, but I'm addressing it now, which is that who you target is the most important aspect of your success. Now, once you've targeted someone, ideally there is a connection with someone that can make the introduction. That always helps. And there are some people who will only take meetings like that. But it's if that's not available to you, and sometimes it isn't, then you can reach out. But don't when you reach out with a compelling introduction that says, because you did this, because you did that, take a look at this, make it easy for them to say, well, this is, and I get some calls, most of the cold calls I get, I ignore. But when somebody says, it sends me a good one, then I'll definitely pay attention. Does that answer your question? Good. Okay. And the final point in this slide is, the best thing you can do for fundraising is make progress with your company. Somebody in an unrelated setting was telling me yesterday that this is the guy, it's funny, this is the guy who sponsors the New Zealand team for Omega. And he was telling me, he's in charge of Omega sponsorship. He obviously has a big checkbook. And he was telling me how some people were telling him, oh, my son is a great golf player, and you should pay attention. And somebody said, well, how do I get you to pay attention to, how do people reach you? He was saying, look, when they are gonna deserve my attention, I'm gonna call them. They won't need to call me. So to the extent that you start making some progress, you're gonna start hearing from the investor. The other thing is, be very careful about assuming that what the investors tell you is true. And the analogy, or to cut to the chase, for most of us here in Silicon Valley, we need to get excited about a project to even consider it. But it's kind of hard to tell investors, or to tell entrepreneurs, your project's not exciting enough. I mean, what kind of an answer is that? Or if we think the person is just not good enough to tell you, you're kind of lame. I mean, so we find, the investors don't say we because I try to avoid this, but most investors just say an easy answer. You're too far, you're too early, you're too late. But the entrepreneurs sometimes then go try to solve that problem. You're too far, I'm going to move to Silicon Valley. You don't have sales, let me try to get the sales. And you're trying to solve the challenges. But the reality is, the entrepreneur is not excited about the investor is not excited, and he's never going to invest in you. So be very careful about paying too much attention to that. What you want to try to do is find out what is the real reason. And by the way, the reason they won't be upfront is they want to keep their options open. Who knows? Maybe your business is going to take off. And if they told you that they thought you were an idiot, you're not going to call them when things go well. If they tell you, keep me posted, I'm really interested, I want to see more traction, then maybe they keep their options open. What you can try to do is try to find out through a back channel what are they really thinking. And you cannot ask them. Imagine you ask someone out on a date. And you say, hey, you want to go out to a movie? And he says, actually, no. Why not? Well, suppose that he thinks you have bad breath, or something like that. Well, he or she is not going to tell you. Or maybe this person has a crush on somebody else. But what you could do is you could go to a friend of this person and say, I was trying to go out with so-and-so. He won't tell me what's wrong. You try to find out for me. And often, you can find out. So that's the same thing you should try to do, because it can be, and I do that a lot for entrepreneurs. They tell me, we met with so-and-so, and they told me some excuse. I often go reach out to the investors, and I find out the real reason. So a few tips for pitching. I mentioned the most important thing is who you target. Another common mistake I see is confusing a company pitch with a product pitch. You're not selling your product, you're selling your company. And what that means is that you need to cover things like how are you going to distribute it, how are you going to get customers. And it's not enough to say SEM and SEO and organic. You really ideally show you've done some tests, you thought it's true, you have some evidence, something special. And then the other thing that is often overlooked are the unit economics. And the unit economics doesn't mean a spreadsheet with lots of numbers, just the very basics. Let's suppose you're going to sell a subscription service, an online subscription service that costs, for which customers are going to pay $10 a month. So you want to say, okay, each customer is going to pay me $10. It's going to cost me maybe $3 to provide that service. It's going to cost me, I think, $2 to acquire. So I have a unit economics, I'm making $5 on each customer. As simple as that. You wouldn't believe how many pitches don't have that. And then you go, well, how is this profitable? All it has is just some long-term projections. So, yes?
Hi, Ariel. Quick question about pitching. I think there is an overall sense that projects coming from Latin America are not as strong as the ones that are coming from within the valley. So in your experience, is there any pitfall that you see when Latinos pitch to you? And on the other hand, is there any highlights that you would say that's a strength that many Latinos have when they pitch to you?
So, let me just start by saying something, which is, here in Silicon Valley, there's very little interest for Latin America. I mean, it's a reality. So, for the vast majority of Latin American companies, it's very, very, very hard to raise money here. I think I might have touched on that look at my next slide, check it out. Which is, very few investors are interested. Most investors don't like to invest where they cannot drive. In Silicon Valley, I like to use this analogy, or imagine you're a kid and your mother takes you to a candy store and there are 1,000 choices. And she says, pick 3. You look at them, you're like, 3 out of 1,000. And then somebody says, by the way, 3 blocks from here, there's another store. Why don't you go check that store out? I'm like, are you kidding me? In Silicon Valley, it's the only place in the world where that's the case. We have more good projects here than any of us can do. So the bar is really high to go outside. Some people do it, I've done some, but the bar is high. Usually it's it's not that typical. Now, what that means is that most other places in the world, London, New York, Boston, don't have that luxury. So you see them invest outside. So I do think it's something to think very careful about. Now, back to Latin America, I think it's not about the pitch. I think mostly the issue is that investors here are just not interested. A few specific things about Latin America that I think are be good or bad. I mean, I think one is most of the markets individually are just not that big. When you look at whether it's Colombia, Argentina, Chile, what have you. The only market that currently is probably sizable is Brazil. And that's the one where there's been a certain amount of investment. It's a very, as you know, Brazil is a very unique place and it's not the easiest culture and ecosystem to understand. Now, some companies talk about Latin American, pan-Latin American projects, if you will. And I think that's interesting, but there's not a lot of evidence of companies succeeding doing that. And it's, you know, each country has its own nuances. It's not that easy to say, yeah, I'm going to start in Argentina, but I'm going to take over Peru, Colombia, Chile. It's hard, so I think we're also a little skeptical about that. The other market that I think some people, me included, are starting to get a little excited about might be Mexico because of the size and proximity to the US. Now, some Latin American companies are going global. And I just yesterday saw a couple of interesting ones where, yeah, I might be based in Chile and Argentina, but I'm doing a product that's a web-based product. And that is a situation where, again, going back to the Silicon Valley, an investor is like, okay, why do I want to go back an Argentinian company to come do what the Silicon Valley companies are? And it's true, there are issues about the cost of the employees and so on. But the reality is, we like super high margin companies here. I mean, if you think about Facebook or Twitter or Dropbox or Airbnb, why do they pay those exorbitant prices to the why can they afford to pay those exorbitant prices to employees? Because they make so much money. And most investors here, that's the kind of deals we want to invest in. It's like, I don't care if the company has to pay $150,000 per engineer, as long as it's a company that's going to be super, super profitable. So it is, and the premise is, oh yeah, the companies that are not as good, that are not going to be able to attract this talent, well, I don't care about those. What I find is, those are also some examples. I'm investing in plenty of companies that pay a lot less to their teams. And they do that by getting them excited, by giving them equity, and so on. Yes?
How about tapping into the Hispanic market here and then moving out to Latin America? Have you seen any case like that?
Where a company starts by selling its product here to the Hispanic market and then goes Latin America or Spain or something like that. Yeah, I mean, I think that's, I've definitely seen either that, or I think I've seen the opposite. I've seen some that are coming from Spain or Latin America and say, oh, we're going to target the Hispanic market in the US. Depends a lot on the product, because just because they're Hispanics doesn't, I mean, there are often lots of differences, so it depends on the product. Did I answer your question? Gracias. All right, so I have a few thoughts that go a little bit outside of fundraising, but before I get into that, any other fundraising specific questions? Yeah.
What about the crowdfunding models or AngelList and something like that?
Yeah, so the crowdfunding. So this morning I was at a conference organized by the Founders Club, and I also have worked a lot with the guys from AngelList, the guys from Micro Ventures, and I think those are terrific. And one of the beauty of those is that they create liquidity in a virtual way, so that for people who are not here. So I actually think those are awesome. I mean, I think that most of those platforms are really good, and they're particularly good for companies from outside Silicon Valley. And not only now, I don't think the top investors in Silicon Valley are going to be doing a lot of investing in companies outside through, say, AngelList, but they might do a little bit. But more important than that, you might get a whole set of other investors from Silicon Valley and the rest of the US and the rest of the world to do it. And you can also syndicate, where maybe you get some of those, you get some locals. That reminds me of another point, which is for Latin American or any foreign company that wants to raise money from Silicon Valley, it really helps if you can show that you have some of the best local investors already backing you. Because if you do, then at least we here can say, oh look, he's from Argentina, and this top Argentinian investor already backing. Oh, that's a good thing. As opposed to, I sometimes get investors say, no, we don't want to do anything with the locals. I say, well, the locals are the ones who know you best. Or even worse, they'll say, no, we want to get Silicon Valley investors first, so that helps us attract the locals. Well, the locals know you best. So I would definitely encourage anybody who wants to raise money to think of it maybe as a hybrid model, which is the other thing that really helps in general, definitely here in Silicon Valley. If you go fundraising on AngelList, for example, you don't want to go without any backers and try to promote your company. Very tough. On the other hand, if you can go in there and already have a few investors, a few backers, advisors, a few names that give you credibility, makes a huge, huge difference. So trying to get some traction in whatever way is easiest for you, and then leverage that to take the fundraising to the next level, super important. But yeah, I think AngelList in particular would be something that, and GOS, I mean all of these platforms, I would really encourage you guys to explore.
Dealing with terms.
Terms, what about it?
What mistakes we need to avoid?
What mistake? Yeah, so what I have found is interesting, which is the most sophisticated, the best investors give the best terms. It sounds kind of crazy, but it's a way, because we have found out that it's not a zero-sum game. That you don't want to screw the entrepreneur. You don't want to, because it just comes back to haunt you. So the best thing to get the best terms is to get good investors. If you get potential investors that are saying, oh, I want 3 times liquidation preference and really low valuation, bad sign. You probably should be super careful and avoid this investor altogether if you can. Now, sometimes that's your only choice. But I mean, I think the typical terms are relatively well known and publicized, and you can see the term sheets and things like Series Seed and so on. Keep it simple. Focus on getting the best possible investor, and if a good investor is pushing for a valuation that's you think it's a little lower than ideal, unless it's not crazy bad, don't obsess over it. The other thing that I do a lot is try to find somebody who's willing to, who's knowledgeable, who can help you negotiate. So one thing I've done sometimes for companies from outside the valley is I've helped them negotiate terms by telling the investors, look, that thing that you're proposing, it's a bad idea. We've already shown here in the valley that it's not good, and here is why. So maybe if you find somebody that can help you with that, or if you can show some instances. At the end of the day, of course, it's demand and supply, but don't obsess too much over the nuances in the same matter. Yeah.
Well, the truth is that most of the startups in Latin America are cloning business models that are already successful somewhere else. And so, given what you just said, that it is really hard, or there's little interest in Silicon Valley of investing in Latin American companies. So, given that awful truth, what would be your advice to all those 95% of entrepreneurs?
So what's my advice to whom?
To those entrepreneurs starting companies in Latin America based on local markets, or cloning just the business model?
So my advice is to try to focus initially, not to rely on Silicon Valley. To try to raise local funds or funds from people who are investing in Silicon Valley. To try to get some traction, and to try to build relationships here with people in Silicon Valley. Not necessarily raise money, but start to build relationships, and hopefully start making progress to the point where it either is proven, you know, the people here start to say, oh, this is interesting, you know, maybe I should pay attention, or where the size and the scope, you know, you're succeeding. So I guess I wouldn't come here and try to raise money as step number one. It's part of what I'm saying. Silicon Valley, maybe leave us for a little later. Particularly, if, like you say, what you're doing is trying to do the Uber of Chile. I think there's very little appetite for those kind of businesses here in Silicon Valley. Now, on the other hand, if you do it and you start getting traction, and then you partner with someone in Colombia, in Peru, and it starts, then it's a different story.
Well, as an entrepreneur, is it something that you would encourage to, like, go start up something locally, or just go big and dream big?
Yeah, I have a slide on that a little bit later. You know, look, there is no right and wrong answer, I don't think. I think it's what works for the entrepreneur. Each entrepreneur needs to find the model that is good for him or for her. So I can't tell you what works best. But I think there's plenty of great local businesses to build. So in these markets have good enough sizes. And just because I'm Silicon Valley, most Silicon Valley investors are not interested, doesn't mean it's a bad business. There are plenty of great businesses. So I don't see any problem with it. I do think that ideally you focus on your top market first. So if you want to go global, then I would suggest don't spend a few years trying to build something in Chile. Because I think that if the top market is going to be the US, start there right away. If on the other hand you say, no, Chile is my top priority, and if I do well, then I'll expand from there, then that's perfect. But if you're saying, oh no, this is just a stepping stone, I think that's very risky because each country is different, you know, there's a time issue, etc. And I think most of us here, just because you have some traction in Chile, that doesn't necessarily give us confidence that, okay, now he's going to go deport that to the US. We would much rather see you doing it here already. Yeah.
I also think that SaaS business models and really focus on revenue.
Mm-hmm.
I recommend startups, at least in Mexico and Chile, just to focus on revenue a lot sooner than later.
I agree. I mean, I think in general, if there's revenue to be had, or if you can monetize early, that's great, and that helps with funding. And there's something else that many companies overlook on the revenue front, which is that revenue can often help you acquire more customers. So I've seen some company. I had a company where the entrepreneur wouldn't charge, and he said, no, I just want to grow. And I was saying, look, you should be doing an affiliate program, but you cannot have affiliates if you don't pay them, and you cannot pay them if you don't have revenue. So by saying that you want to grow and not charging, you're actually growing less. So yeah, I totally agree that revenue is a good thing, particularly for if you're not super well funded. If you have millions of dollars of funding and you don't need to worry about it, maybe. Yeah. All right. Yeah.
Can you give an example of your investment in the international company? Like, because I saw a list of and one of them is Wiki.com.
Yeah.
Can you give an example?
So you want me an example of an investment in what?
In foreign company.
Oh, in foreign company. Yeah, so I'm an investor in Viva Real, which is a real estate portal in Brazil. And Vicky is interesting because Vicky, which we just sold to Rakuten, was in Singapore. But the founder went to Stanford Business School. I met him there. I really liked him, and so that's kind of how the connection came. I'm actually now, this is probably not public, so I cannot say, but I'm looking at making an investment in a company in Mexico, in the financial sector. But it's very rare. For me, and part of the reason is that I like to be hands-on, I like to help, and I'm not a big phone person, so I find that if the company is local, and I can be more involved, which is what I like to do. Yeah.
And if it is a mix, like development is in Latin America and CEO business dev is here, what do you think about those type of companies?
If it's, sorry, say that again?
So development in Argentina.
Oh, yeah, like in your case, right?
Like my case.
Yeah, terrible idea. I mean, I think that's fine. I mean, again, there's no, everybody needs to do what works for them. Ideal, what's the ideal? I think for us here, ideal is if we're going to invest, you're all here. And if you have a great team, if you tell me that you could move your Argentinian team to Silicon Valley, then in my experience, having everyone in the same room, working together in the same time zone works better. Now, if you tell me you're going to try to come here, but then you got to hire and compete with, then it's like, oh, that's a tough one. So it really depends. It's I've seen a lot of people struggle with their remote teams. A few succeed. So the odds are not super in favor, but it's not impossible. Depends on a lot of factors. But yeah, I mean, I think it's viable. Yeah.
What's your recommendation to build this relationship with angels here?
With angels here?
Yeah, angel and VCs.
What's my recommendation for doing that? Well, so the first thing I would say is that it's obviously a lot easier if you are based here. So, I sometimes get someone who says, okay, I'm here for a week and I want to raise some money for Silicon Valley, and after raising money, I'm going to move. And my most typical response is, after you move, call me. Because we're just too busy to be jumping around saying, oh, I got to adapt my schedule because you're here for a week and then who knows when you're going to be here. It's like, so the first thing I would say is, if you're here, or if at least you're spending significant periods of time here. So it's not like, I'm here for 4 days, can you meet tomorrow? But it's like, I'm here for a month. Like, oh, okay, that works. So obviously the more time, if you're gonna, or at least if you give heads up, hey, I'm gonna be there, I mean, it's very typical Latin thing, and again, I can say it because I'm from Venezuela, which is like, oh, I just showed up, and I'm here for a day. I'm sure you can, and then not only that, then I'm late for the meeting. So, or don't show up at all. So I think, yeah, physical presence helps. And the other thing I would say is trying to be value added and trying to make it easy for me to have a conversation. And it's actually my last slide, which is help me help you. I get somebody who says, hey, I'm going to be there, I'm showing up tomorrow, introduce me to an investor. It's like, wow, that's a tough one. Compare that with someone saying, I'm already here, I'm going to be there in 2 months. I read such and such blog, and I saw that he wrote about this industry that I'm working on, and I know that person is connected to you, and here is an email for him addressing some of the points he brought in his blog or that he tweeted about. Do you mind forwarding that? So all of a sudden, it makes it really easy for me to make a connection, and hopefully it makes the connection a little more meaningful so that the recipient goes like, oh, okay, I can. This person is thoughtful. Is doing something interesting. So the more homework, the more work you put up front, I think the more likely you are that you're going to be able to build those relationships. And and definitely events help. There's so many events here in Silicon Valley. So I should be careful because I was doing a talk a couple of months ago and I mentioned that, for example, I like to kite surf. And if somebody is another kite surfer, that alone, that gives a little connection to the person, so I'm much more likely to pay attention. Or if I'm from Venezuela, the other person from Venezuela, I need to be careful because all of a sudden some of the people in the audience and some of these entrepreneurs got into kite surfing, think, oh, I'm a kite surfer now, can we help? So it needs to be real, it needs to be authentic, but find those connections, those points of overlap that might make the person be more open. So how are we doing time-wise? I have a few slides that are other stuff, but I don't know how we're doing. If you wanna,
Your time is more valuable.
well, let me try to go through these things quickly. So you can't follow all the advice you hear, and my advice is I'm sure going to contradict a lot of advice that you guys hear from a lot of other people. So you just gotta make sure that you're understanding and finding the thing that works for you. This is particularly relevant for those of you from outside the Valley. Do not believe what you read on TechCrunch or any. So I was there when a lot of these companies that now, whether it's StumbleUpon or Twitter or Yahoo, and the stories are not true. And what happens is there's revisionist history because you don't want to say, well, we kind of stumbled into this thing and then we had a fight and because of that, this other guy left. And so, a lot of these things are just very serendipitous. And why do I think this is important? Because I've seen entrepreneurs who try to replicate the way some of these companies got created with the grand vision and the master plan. That's just not the way these things normally occur. You know, to use a baseball, I know you guys are mostly from soccer countries, but to use a baseball analogy, you know, get to first base, and then maybe you get to second base, and then to third base, and that's the way actually most big successes here in the Valley really happen. Speed, again, I think speed is way overrated. You wouldn't believe my first startup, 1994, web analytics. In early '96, I remember this conversation where we have 6 months. If in 6 months we don't nail this market, it's over. You know, companies like Omniture came afterwards and went public. There's still companies doing that today. So the reality is that it's so much more important to do the right thing than to move really quickly. And I think most people here who have some experience realize that. I'm stealing this from someone else, my friend Ali Partovi, who is a very successful angel investor. I mean, he's invested in Dropbox, invested in Facebook. I work with him at Link Exchange. And he was asked to say, well, what is Silicon Valley? Can Silicon Valley exist somewhere else? And he made this point that I think is just so precious, which is that what we know here is that risk is our friend. That it's not about diversifying ourselves and lowering risk, because then you don't do anything. That's what big companies do. Most successful companies here make bold moves, risky moves. And that's okay, and that's how you make something big. Now that doesn't mean that you don't, so how do you deal with the risk, with failures? Well, you deal with them over time. Instead of trying to do 5 things at a time, which we don't think works very well, you're bold, you're aggressive, you try something. If it doesn't work, well, you try another one. So your diversification doesn't come from hedging your bets at any given time, but it comes from trying one thing, from doing it over time, one after the other. Now, that's not to say that you want to blindly go and focus and be very bold about something that who knows if it's going to work. As lean startup, etc. You obviously initially want to be learning until you get that certain degree of confidence that okay, this is something that stands a good chance, and then you go for it. I'm going to skip this. This one is one that I was at a panel at Stanford Business School alumni panel where I think 4 or 5 of us, who have all had plenty of experience here in Silicon Valley, and at the end of the panel, they asked, what's the biggest lesson you've learned in the past 10 years? And 3 out of the 4, or 4 out of the 5 said the same thing, just hire slow and fire fast. Particularly the one about fire fast. The moment somebody doesn't look like they're working, move on. And that's another